Hello and welcome. My name is Lee Klinger. I am the CEO of the Alaska Commercial Fishing and Agriculture Bank, or CFAB. Prior to my becoming CEO, I spent over 20 years in the credit department of CFAB as well as other banks. Following, we are going to go over some of the common concerns and questions that a lender may have when considering your loan request. It is important to keep in mind that these are general in nature, and the exact information required will vary from lender to lender. What information does the lender need from you to review your loan request? And why do they need so much paperwork? Good questions. It does seem like a lot of paperwork, but it is all necessary. Your lender is not involved in your day-to-day operation, so we use all that paperwork to help us determine if you are creditworthy. Lenders deal in paper and information. They look at your financials, profit and loss statements, tax returns, credit reports, and other information gathered from a variety of sources. All of that information helps them evaluate your repayment ability and whether or not the loan is within their acceptable level of risk. Some of the basic information we need includes: how much money do you want to borrow? What will the money be used for? How will it be repaid? And what is your backup plan? This, along with your financial information, is a good place to start. There are many types of loans that lenders make. What we are discussing today are commercial loans, or loans where the money borrowed is used in your business. We will focus on loans for commercial fishing. And yes, commercial fishing is a business. The criteria used for commercial loans is different than what is used for a consumer loan. Think car or house. Commercial loans tend to be higher in risk, so the requirements will be more stringent. There are two basic types of commercial lenders: cash flow lenders and asset-based lenders. Cash flow refers to your income or earnings. A cash flow lender will base most of their decision on your cash flow. While they will still require collateral, the emphasis will be on your cash flow. An asset-based lender will look at the value of the collateral or the asset that will secure the loan and then look to your cash flow. But the bulk of their decision will be based on the value of the collateral. Now that we understand the types of loans, let's talk about the 5 C's of credit. The first C refers to capacity. To me, this is the second most critical C. It measures your ability to repay the loan. Can you afford the payments? Lenders are lending other people's money, and because of this, lenders will make their decision based on their comfort with the overall risk of the loan. Lenders don't do you a favor when they make you a loan that you cannot afford. Your lender will look at your earnings history and then review the loan request to determine the impact the loan will have on your cash flow. For example, if you are buying another permit or some IFQs, your income should increase. On the other hand, it is harder for your lender to measure what impact a faster or larger boat may have on your cash flow. In order for your lender to determine if you can afford the loan, they will look at all of your income and all of your debts, including living expenses and taxes. We get this information from your credit report, loan application, tax returns, and processor statements. If you have not run your own fishing operation before, or you do not have other sources of income, it will be hard for you to show repayment ability from your history. In these cases, your lender may require a cosigner to sign on your loan. Whether or not you are a highliner or the #1 producer for your processor will not matter if the cost of your operation leaves you with very little income at the end of the season. I have seen numerous operations where the crew took home more than the captain. When looking at cash flow, the focus is on what you keep, not what you make. Catching the fish is only the beginning. Managing your income wisely is also important. 90% of all businesses fail due to poor financial management. So, we've covered capacity. Now let's talk about collateral. Generally, the asset being purchased will be the collateral. Most lenders lend up to 70 to 80% of the collateral value. Emphasis being on collateral value. The value the lender gives the collateral may differ from the market value or the purchase price. Depending on whether you are in a seller's or buyer's market will affect how the lender values the collateral. The lender's values are generally more conservative. It is possible the price you are willing to pay for the asset will be higher than the lender's valuation. So let's assume the market and collateral value are the same. Using a purchase price of $100,000, your down payment would be roughly $20,000 to $30,000. Some lenders will let you substitute additional collateral, like a boat, for a down payment if you don't have the cash. Many borrowers have commented that lenders want too much collateral. Collateral can be an emotional issue for borrowers, and it might help to know that lenders take collateral for a variety of reasons. They look at it as a source of repayment should you default. They look at it as a sign of commitment to the loan. They also look at it as a way to lower their risk. Lenders are not boat or permit brokers, and taking back the collateral is not their goal. They would rather have the loan repaid. We have talked about capacity and collateral. Now let's discuss capital. While your income is your primary source of repayment, capital is what you need if you don't have the income. It's your savings, your investments, and other assets that you own that provide you options when the season doesn't go as planned. It's your backup plan. More than just your backup plan, having the cash or resources needed to get and keep your operation up and running is vital to your success. Lenders like to know that you have options and that you have planned well. Now let's look at the fourth C, conditions. You may not have much control over conditions, but you should be aware of them. Remember, lenders deal in information. We look at industry conditions like market, price, and competition. Ask yourself, is it really a good time for me to make this investment? Warren Buffett once said, "Be fearful when others are greedy, and greedy only when others are fearful." Have you planned for this investment? Have you saved your money? Paid down your debts? The down cycle can be the best time to invest, and if you have prepared, it can make you a lower risk to your lender. This brings us to the fifth C, character. This is the most important C, but it is also the hardest for a lender to assess, especially on a new borrower. Everyone has a friend or a family member they would not hesitate to lend money to, and perhaps one they wouldn't feel comfortable lending money to. My guess is that the major difference between the two is your assessment of their character. So how does your lender assess your character? They look at your history. Today, more than ever, there are many sources of information to help us do this. One of those is your credit report. This tells your lender how you have handled other debts or obligations. Before you apply for a loan, you should review your credit report. I've sat across from many borrowers over the years who were totally caught off guard by the things in their credit reports. Your loan application should contain an explanation of any derogatory information in yours. Other things we use to evaluate character are whether or not you are behind on your taxes or your child support. Do you have a criminal record? Have you gotten a DUI? Any fishing violations? How have you managed your money? Did you plan and prepare for this purchase? Or have you been spending your money on toys? Think brand new trucks, snow machines, vacations. Are your credit card balances high? All of the choices you have made in the past will be reviewed. Generally, one or two poor choices are not an issue, but a collection of them may be difficult to explain. Character is the difference between working through a difficult situation or not. For me, character is the most important C. Commercial fishing is cyclical, and most fishermen will have one or more bad years during their career. It is your character that you and your lender will rely on to get through these times. I have seen many borrowers over the years who have encountered several setbacks, some because of their choices, and some due to circumstances beyond their control. In the end, it was their character that got them through. What does your history say about you? If your loan request is declined, make sure you understand why. If you know why, Then you can work at overcoming those areas and reapply. Lenders are in the business of lending money. We want to lend money. That is how we make a living. But it has to make sense, and the level of risk must be acceptable to your lender, and for that matter, you. What that level is will vary from lender to lender. Lending is an art, not a science. Before we conclude, there is one more C we need to mention: communication. Before you apply, talk to your lender, get their advice, and once you have the loan, communicate. Your lender is a valuable resource. Be in touch on a routine basis, and if the season isn't going well, let them know sooner rather than later. We hope this podcast has been helpful to you so that you may have a better understanding of the commercial loan process. Good luck to you.